Hello everyone, welcome to this episode. First, let's take a look at the Japanese yen. Recently, the yen has experienced rare and significant fluctuations. The USD/JPY pair sharply fell from its historical high of above 163 on July 30th, dropping to around 155.30 during the early trading on August 3rd, resulting in the yen appreciating nearly 5% within 3 trading days. The Japanese Ministry of Finance intervened directly in the foreign exchange market 3 times on July 30th, 31st, and August 1st. Unlike previous interventions, this round received clear coordination from the U.S. Treasury. U.S. Treasury Secretary Yellen confirmed that the U.S. and Japan had launched a joint action, mentioning the use of the Federal Reserve's FIMA repo tool to provide liquidity support. President Trump also publicly confirmed that the U.S. was buying yen, emphasizing the economic benefits of the U.S.-Japan alliance and related arrangements. Joint intervention in the exchange rate by the US and Japan is rare. Previously, the yen had continued to weaken, reflecting a significant reduction in the Bank of Japan's ability to intervene alone. However, after receiving clear support from the US, the strength of its intervention has significantly increased, triggering large-scale short covering by yen bears and arbitrage trading funds. The coordinated intervention established a temporary policy floor, and the exchange rate subsequently rebounded from its low, currently quoted around 157.43. It is expected that the USD/JPY will experience wide fluctuations in the range of 155 to 158 in the short term. Next, let's look at the gold market. The latest spot gold price is around $4,050 per ounce, with upward momentum slowing in the short term. The Federal Reserve chose to stay put in July, but internal hawkish divisions emerged, with 3 voting members supporting a 25 basis point rate hike. This indicates that the Fed remains highly vigilant about persistent inflation, and market expectations for the duration of the high interest rate environment have been extended, creating some bearish pressure on gold. On the other hand, the temporary easing of tensions between the US and Iran has led to a decline in oil prices. Trump recently claimed that the Strait of Hormuz would open as early as August 4th, stating that negotiations with Iran are progressing rapidly. However, Iran has not yet confirmed this, and the credibility of the information remains in doubt. The direction of US-Iran relations is highly uncertain, and investors need to cautiously manage risks. Additionally, this Friday, the market will release US non-farm payroll data, which will provide further guidance for the Fed's future policy direction. That concludes this episode. Thank you for watching, and see you next time.